Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, March the 18th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA 5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart, you'll notice there's a new contract. So if you haven't updated this yet, you need to so that you get the tick data continues. This is in Windsor Broker, our demo account, but that's just updating. Same message. Let me bring this down into focus. We have topped out wave one up at 114.72. We believe we're on a multi-year decline. I should say multi-years and years decline, as we've already topped out roughly in May of 22 or in 2022. And since then, it's almost 3 years into this top. We're still just grinding. So imagine how much, 2, 3 more years or so coming down here. It's going to take a while, but that's the plan. Big picture, we bottomed in 2007, roughly around May of 2007, down here at 70.53. 15 years later, when we were discussing this, we were going to go up to 115, 120 area. You can see my lines on there. And sure enough, 15 years, I didn't know it was going to take that long, but finally got there. Now we're looking at a retracement. Typically, we expect a deeper retracement when it's this wave 2 super cycle. And all that means is we should definitely go into the sweet spot area. And I like the deeper one based on that. So we're looking at about a 78.6% retracement, right around 80. Now, again, when we talked about this top in reversal, we said it would take multiple years. Here you go, almost 3 years in, and we still got a long way to go. But that's the plan. And the dollar did a beautiful retracement up into that 618 and found resistance where we expected, right around that 109 area. And now we're getting pushed lower. That is the plan. Going over here to the charting platform, we can see what we were discussing for a very long time now. This latest move from the swing point low to the swing point high, we've been waiting for us to close below this 103.90 area, which is my 618 retracement to the downside. We've done that last several days. Even as we tried to pop up, we found resistance there, and we're still in the same loaded and close below that 618 level. So everybody knows what that means, right? That means we have a 75% chance that price action is going to continue to stair step lower and start heading toward this 1448, which is at 98.86. And we have over a 70+% chance we're going to head down toward this 97.68 level. What do both of these numbers have in common? They're below the latest swing point. So the bias is any rally on the dollar index should be sold as we start moving down toward this target zone. Now, again, this could take weeks or even months to get down here. There's no rule to say, well, once you break the 618, yeah, there's a high probability this is where you're headed, but it doesn't tell you, is it a day? Is it a week? Is it a month? Is it a year? Timing is the most difficult. So any questions? Where are we going? We're headed to 98, 97, onward and downward in the weeks, months, and years to come. So Any rally should be bought. Remember at the beginning of the year, we started talking about this level and that we needed that retracement and the bigger picture. Let me move this over here. Let me actually get this out of the way for a second. And we go to like a weekly chart to show you the bigger view. And we had talked about this. From that prior swing point high to swing point low, we were due for a 618 retracement. We expected we were going to test it at some point. We fell shy a few of these times, but this last one, sure enough, finally did this retest. And that's important because if this is the top in reversal, which we believe it is, typically at some point you're going to get a 618 retracement and it fails. That's a very strong sign there's a lot more downside. Why is the dollar kind of holding right now? Check it out. It's hitting our magic Fibbo line. Magic MPA Magic Fibbo line, which is a part of this MPA PE5 version 5.0 software. So this Magic Fibbo line is stuck right at this 103 area, and that's what we've been testing. We've already closed below that 103.90, which states we're coming down here, but that's why it takes time. And the Magic Fibbo is a beautiful support and resistance level, which is Fibonacci related. And the importance of it shows how price action always tends to come around it and find either support and or resistance. So as we start breaking this on the weekly, that will allow us to start coming down toward these extensions in the weeks and months and years as we continue to stair step lower. Well, why do we spend so much time on the dollar index, Mr. Toussaint? As you well know, because if you know where the dollar index is headed, then you have a very high probability of where a lot of other market assets are headed, like the euro dollar, pound dollar, and the Forex market, and many others in the indices and other things as well. So when we look at this, we can see a beautiful retracement rejection. Now we're just holding on the magic Fibbo, and this is the weekly chart. But I'm already making the statement we said a while back that once we would close below this 103.90 area, we would believe this would be the beginning of the end. And that we would expect this to stair step lower in the weeks, months to come. That's where I definitely think we're going. Now, because looking at the magic Fibbo on this daily chart, now we're on the daily, we could see we bounced off of it as we had expected, made a lower high, then we broke below. At some point, I do expect, and even though this magic Fibbo is starting to turn down, the more we break down, the more this line's going to break down. At some point, I do expect we're going to get some sort of retrace back toward that magic Fibbo to get rejected and to continue lower. That's kind of the plan. Is it now? No, we could break down further and then come up and do it. And again, the more we keep breaking down, which again, we're targeting 96, well, 98, 97 first, right there. So the more we start breaking down, the more this line's going to turn down. And at some point, we will retrace back to visit this line. It's imperative, and it ultimately will happen. Pay me now, pay me later, but we're going to get a retracement back towards that line. Well, again, we started talking about the beginning of the year-ish, we started talking about we were due for this rejection. We grinded up to that 618 bigger picture. And again, that's why I went to the weekly. We had the bigger high up here at the 114 and change. On this platform, it's 114.95. On that MetaTrader, it was 114.72. Same difference, just different data feeds. And we rallied up into a 618 retracement, got rejected, and now we're pushing back lower. Amen? So this was the plan. So as I zoom in, what's next? Well, I can tell you, if we get this rally earlier, the bigger the rally, the more we want to sell it. So any rally should be sold because we expect the dollar to keep stair stepping lower. And again, my immediate targets in the weeks, maybe months ahead is going to be 98.86 and then 97.68. The 1.1448 and the 1.272 extensions. Got it? Well, why is that important? Because we talked about going long the euro dollar. We said it was a great time during this bottom reversal here after the euro big pullback was a great time to go long. We had several things setting up. We had a weekly PAI hooking across on the software. We had this extension. We had our 618 retracement from the bigger move. You can't really see, I got to kind of condense all this, but back here where we bottomed a couple of years back, we talked about this saying this is a great opportunity to go long. The euro's due for a massive retracement. And again, I'm not looking for the euro to reverse and go to all-time highs, but I'm looking for the euro to reverse and go up thousands of pips before we're done. And since this bottom low, spot on, went up almost 2,000 pips, we've been correcting ever since. We called the bottom over here. It was a 618 retracement. Beautiful. Just like the dollar went up to the 618, got rejected. This went down to the 618 and reversed up. So when we started talking about that, we said, let's go long, not only here, but after this pullback. And we always go over our Elliott wave on our market forecast days. So I'm going to go over that in a second. But we can see coming down off of that 618 level, we bounced. And we talked about going long here. We're going to go run up toward the magic Fibbo. And then we got that, I think it was either FOMC or one of those, had a big swing day where this thing came way down. And during this rally up, I kept saying any dip should be bought because we're going higher. And sure enough, we reached the magic Fibbo, we broke out, and now we're pausing in. Guess what's sitting up here? Big resistance level. But if we go to our weekly chart, just like the weekly was kind of holding, this one's testing that weekly chart, weekly magic Fibbo right now. And it looks like we're probably going to find support as we then continue higher. Well, the same rule is here. From the prior high to low, we closed above that 618, which is around this 108 and change. And it's also above the weekly EMA right there, a magic Fibbo line. So that is very bullish for what? 75% chance we're going to 113.60 and a 70 plus percent chance we go on to 114.95. Hundreds of pips further. So we were spot on the bounce. Now, at some point, we could get some sort of retracement, sure. Price never goes in one direction. It always stair steps when it moves. Whether you're in an uptrend or a downtrend, you're going to stair step up or you're going to stair step down. But the technical picture is screaming. We talked about this a long time ago. And if you were more conservative, I said when we start closing above 109.40, get not a wick, but a body close, then that's a game changer to go long to 113.60, 114.95. So we've been long off of the bounce, much less if you're just starting. I'd like to trade the euro. Yeah, I want to get a few hundred pips. I like it. Well, here you go. When the euro closes above 109.40, because we're testing that battle zone, we got this big resistance battle zone. Let me kind of bring this into perspective. It's been a major battle zone for quite some time, right around that same level. But when we start closing above this swing point, you can see it across this chart, we've had some support, we've had some resistance, and it's not the straightest of lines. It should go a little bit higher. Let me do that again. Up here, right around this big battle zone that we've tested. So you come across and you can see it has been a major support and resistance level. Initial support, we broke it, we broke back down, we retested as resistance, we went down, retested as resistance, failed, kind of hung in the area, back to resistance to support, back to resistance, 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 back to support initially here going up. Then we broke back down, back to resistance. So it's been a flip-flop between support and resistance. And the more often it flips between support and resistance, the stronger this area becomes. So is it anyone's surprise, Mr. Toussaint, that when we rallied right back to it, It's been a few days and now weeks. You can see this is a weekly chart. We've been testing it. No surprise. That's why when I said when we close above 109.40, not a wick of a candle, but a body close, game on. 113.60, 114.95. That's a gimme. You know what they call a gimme? When you're playing golf and your ball's within the length of your putter's handle and the grip, it's considered a gimme. Well, there you go. That's a gimme once we close above 109.40. Fair enough? So let me go back to the daily, drill down, and we can see we're struggling in this area. We've been here last several days, just testing this zone, but it's already given us what we wanted. We had a candle body close, this big green candle right there, candle body close above that 618. So the rule is 75% chance we go on a 1.1448 and a 70 plus percent chance we go on a 114.95. So even though I'm saying if you're more conservative, wait till you get a close above 109.40, because what can still happen here, this thing could fail, come back down, retest the magic Fibbo line, bounce, then finally get the close above 109.40. And once it's done, bingo. Got it? So we were long down here, but if you want a new entry, and you say at what point? Remember, for the last multiple weeks, I said as soon as we start closing above this battle zone, and again, you come across this chart, you can see where it's been resistance for a while. It broke up, it came back to support, went higher, it broke back down, retested its resistance. So when we finally close above this technical point, it is game on. Well, I'm telling you ahead of time, it is already game on because the prior high to low, we already got what we needed to know that the higher probability we're going up here. But why do you want to wait if you're more conservative? Because we might get another retracement here. So if you're long, you might be underwater a little bit, and then it goes up, or it could just slice through. We've been testing it for a while. So we get any dip down here, be sure you buy it because we're going up there. So if we can dip down to 106, there's a 700-point move that we're going back to 113. Not to say we have to dip there because we already broke this, but at some point we're going to come back and test this daily Fibbo line right there, magic Fibbo. See, it's behind my little chart. MPA magic Fibbo line is this orange line. It is magical level. It's been sprinkled with fairy dust and it's magically delicious. So it must be on your charts. Very important. So at some point, Medusa, could this thing start ripping higher without touching this? Yeah, it already kind of broke it, retested a little bit, and went higher. But typically, it will come back to revisit. And the more we climb as we start heading to these targets, again, in my humble opinion, this is definitely where we're headed. But we could take a detour and come back down and retest this guy at some point. So as this grinds, this thing starts to turn up. Notice we've been ripping higher and we were sloping downward. And now since we've been ripping higher, the thing's starting to turn upwards. See it? So this will continue. We start stair stepping higher and higher. This thing will continue to turn upwards with it. And at some point, we're due for a little retracement to come back and retest it to continue. I would say the likelihood we come back and retest this Fibbo line is a good chance before we just get up to these targets hundreds and hundreds of pips later. So I do think we'll get some sort of retracement back to that direction at some point. Amen? What about the pound dollar? Same thing. Look at the pound. We talked about a big reversal down here. We said we were going to make hundreds and hundreds of pips when we get to the magic Fibbo. We break it, sets the tone. We start closing above this 129 level. Look what we've done. Big green candle here. Those candle bodies, not just wicks up in here. And even with the last few days here, we got a little pullback. We're still above that 618. So what does that say about the pound dollar? You should be long. As we talked about buying it way down here, you have hundreds and hundreds of pips, but stay long because we're going to 136.27, 137.97. So what does that mean? Because of the prior high to low, and this big body close right there, we got several of them, but there's the first green one, the red one, even all these were still above body closes, not wicks. That says we have a 75% chance we're going to 136, excuse me, 136.27. This is the pound, and a 70 plus percent chance we're going to 137.97. Look at where we are. But if you're more conservative and you didn't take this long over the last several weeks, shame on you. But hey, I'm not a certified financial planner. My job is not to tell you what to do, but I can tell you what I'm doing and what the charts are saying. So the charts are now screaming one right there, 136.27, 137.97. Any dip should be bought on the pound dollar as we're going up here. When's it going to get there? Probably take weeks, maybe even months, but it's headed here. No question. It's definitely headed up here, highest probability. Amen? So at some point, notice the magic Fibbo line here. It's very thin, but if you zoom in, it's still there. At some point, it was too facing downward, moving lower with this pullback. And now that we've been ripping higher, hundreds and hundreds and hundreds of pips higher as we anticipated, we're now starting to turn back up. So yes, even this one at some point, more than likely before we just go ripping way up here, that one, I guess I gotta condense this one more time. Before we go ripping way up here, 800 more pips from 129 to 136, 139 up here, 138. Before we start ripping way up there, at some point, we're probably going to get some sort of pullback to retest that. Can we come back now? Yeah. Any dips today, tomorrow, next week, next month that we dip before we get to these targets should be bought. I've been saying it since this level down there when we had discussed it, right? All righty. So what about the software? Well, the software has been screaming the same picture. Look at the euro on the weekly chart. This is where that bottom reversal occurred. Beautiful reversal. We got the hook, we got the cross, we got the slope, we got the anglet separation. And even as we started to engage, disengage, we talked about buying the dip as we were going higher. Look at that, beautiful. And Mr. Tucson, others, James, Ian, didn't we talk about this, Emil, that this was highly likely we were going to get a weekly cycle up? I kind of draw the Picasso. I've been using this software for so long and has been tinkering with it, as you well know, and I just got a feel for what the software does and what type of market conditions. And this too, on this euro dollar, is a beautiful 618 retracement, and this is bouncing off that 618 retracement from this low to that high. Beautiful 618 retracement like I showed you earlier, and it's setting up for the big move up. And this is part of that weekly cycle. And our monthly is turning back up as well. I talked about this as well. That what was this going to do? It was going to reverse from this 95, where we talked about it initially. We had a monthly oversold, a weekly, a daily, multiple time frames oversold. The software was screaming big rally. And we got the monthly cycling up, been engaging, disengaged. We finally got the monthly toward overbought. We get this dip, it's slingshotting higher and higher. What does that mean? Just like over here, when the euro went higher and higher and higher, stair-stepping higher and higher and higher, all the way toward its all-time high over here, this started this little slingshot process. Slingshot, 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 slingshot. So I had pointed this out, go back in the archive, long time ago. The monthly was going to cycle. And when it finally cycles, it'll start slingshotting higher and higher and higher and higher as we ultimately start heading toward this big retracement. The bigger picture is the euro is expected to make a 618 retracement if not push it toward that 786. So I'm kind of splitting the difference. My target is between that 140 and 145 area up here. That's where I think this is ultimately going. Well, the bottom line is if the dollar index heads to this target zone, which is around 78.6 retracement on this one, around 80, then there's no ifs, no buts, no ands, no exception. The euro is going to go up here. Again, it's going to take years, as it's been already a couple of years, almost 3 years in the making, but we got several more years that we're going to go up here. No ifs, no buts, no ands. The dollar index goes to 80, we're going up here. Well, what about the pound? If the dollar goes to 80, the pound's going up here, somewhere around that 160 to 170, kind of the 165 range is what I'm looking for. It too did a very similar thing. We had a monthly at extremes, weekly, etc. We drew this not after the fact, well in advance. I said, look, the pound is at a ridiculously oversold, that you need to be going long because this thing's going to have a big retracement in the years to come, and that we had the software setting up, and that we drew the Picasso, that this was going to cycle, this was going to cycle. And when it did cycle, we started turning over and slingshotting higher and higher and higher and higher as this baby goes ripping up there. And similar over here, you get the slingshot, and there's not a lot of data here, but you can see it went to overbought territory, and then we started slingshotting higher and higher and higher and higher as the pound went up to its all-time high area. So again, what this is not is the pound reversal to go to all-time highs. It is simply a pound reversal to go into this, we call it a sweet spot, which is my 61.8% retracement. And maybe it gets a little feisty, we go a little bit more, but I'm looking for a reversal back down once we get up here years later. Why is that? Here's why we talk about Elliott wave. I do believe this is what Euro's doing. It is in a big picture, this bottom reversal, and we're headed where? Way up here. We're going in this A, all the way up here into that B. And again, probably several years from now before we get there. But once we do, what's after AB? We're going to come back down in a C. So in the interim, what do we have? We got a 1, we got a 2, we're going to go up in 3, a 4, a 5, make this smaller degree A, down in a B, up in a C to complete this wave B. So if you're thinking, what is all this 1, 2, 3 ABCs? That's Elliott wave. That's why Fibonacci's, the software, everything ties in with this. So this is how we give the big picture, multi-year picture of where things are headed, and kind of the step by GPS coordinates, turn by turn GPS coordinates of where the markets are likely to go before we get to the destination. So the euro is definitely not going to go a straight shot, nonstop flight up there. It takes these scenic routes along the way in these waves. Got it? All right, so any questions? This looks like the bottom. I called this bottom premature. I said this is likely. It was a beautiful 618 retracement. See it right there, 618. Beautiful retracement. And the bias is we should be buying the dips for a long time. And I don't mean every time it goes down 2 pips, 10 pips, you should be buying it. In the bigger picture, if you're targeting way up here, any large dip should be bought. And we kind of give you insight with the software and the technical picture of where we're likely to get these pullbacks. We kind of pegged all of these pullbacks pretty spot on. So in closing, the bias is this is the low in place, and we're going to go much higher in the weeks, months, and years to come. At some point, you just don't go straight up as we've been ripping higher. We are going to get a retracement back, but I would say that this bottom is very highly likely in check, just as this bottom was very highly likely in check. And we did get a 618 retracement off of that bigger move. Now it's time to go much, much higher. Weeks, months, and years to come, we're going to keep stair stepping. Amen? So don't think that, well, Once I get to my 109.40 and we close, we're just going to go straight to that 113 target. It will stair step its way up there, right? So one more time, euro. We're just not going to go straight to this target. Anything's possible, but we're going to stair step our way up there. But this is why you use the software. You get into a position of authority, you let it continue to run. You have your stop loss in place, so if it ever dips below a certain level, it'll take you out and profit. Otherwise, this thing will keep running to your next target. So once we get a close, and if you have this right here, once we get a close above that 109.40 area, which is that magical battle zone, that's why we're kind of struggling in this area. Typical that happens. But once we close and break above, we're going to go to this target. So I can set my target 1 at 113.60, target 2 at 114.95, target 3 way up here at 118.50, and let it go. So when do we get in? I'm already in it. When can someone else more conservative get in? I would wait until we close a daily candle, at least a daily candle body above that 109.40, because again, at some point, we've been on a nice little trek here and we're just kind of chopping around. We might get a bigger dip into here and then we go higher. So if you're going to go long right now, you need to put your stop loss probably below this swing point. And I know someone said, well, man, that's hundreds of pips lower. It is. But that's why I think the least I would do is put my stop loss below the magic Fibbo line. That's why if you want to wait till it finally closes above that 109.40, then you get in with a smaller stop loss. But I hear people talk about stop loss. Well, your trading strategy is not very good if you use a bigger stop loss. Just in general, not to me, but just in general. If you can't use large stop loss, what do you think the big traders do? You think they put 10 pip stop loss, 20 pip stop loss, 100 pip? Those big hedge funds don't even use stop losses per se because they have so much money. They deliberately drive the market to take out the small retail traders, then they continue to push higher. But it's the technical picture why you have to pay attention to it. I called the bottom very strongly down here. I called this bottom very strongly. So what's the next bottom? Probably we won't go any lower to the magic Fibbo line. Right? Again, it's a moving target, but we probably won't go any lower than that. But if you think, well, I'm going to go long because this is where we're headed, and I'm going to put a 10 pip stop loss, or I'm going to use maybe a 100 pip stop loss, this little swing point here. You could try it. I just like to give it more breathing room because I definitely know we're going here. And yes, at some point we could come back maybe a couple of hundred pips to retest this 106 area. Any questions? Because we barely have it. We just kind of rip to it. Then we dip slightly onto the magic Fibbo to go higher, but we really didn't break above to retest it. That's kind of what I was talking about a long time ago. That once we break it, I do enjoy seeing a break above, a retest, then ripping higher. But hey, up hundreds and hundreds of pips already. We're in a position of authority. What is left to do? Let it continue to go. And once we get this close above 109.40 with a candle body, so if you're interested, watch your charts. You close above 109.40, then whatever platform you're trading in, find that swing point, which we're talking about, this battle zone. When it closes above, this one did not. It closed right at it, right at it, right at it. And even this red candle is still below it, hadn't closed above it. But once it does, go long. There's your target, 113.60. Target 2, 114.95. Target 3, 118.52. Highest of highest probability. Pound, same thing. We still got that magical zone we are in the testing zone of. Yes, we've already closed above, so we're definitely going to go up here, in my humble opinion, no question. But it could take weeks, it could take months. It might even be sometime next year before we get up there. We shall see. Yes, when it gets going, it could rip and be here before you know it. But once we finally close above this battle zone, basically above that 130.50, And it's the same thing. It's a battle zone. It was former resistance, support, 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 resistance, resistance. So there's no reason to believe that even if we grind up a few more ticks up here, we probably get some sort of pullback before we can break it. And even better is once we break it, we'll probably come back to retest it to then say game on. But that's when, if you're more conservative, fine. Wait till we get a close above there. Target 1, 136. Target 2, 138. Target 3, 142. And I know that's some big numbers, but again, don't think we're going to go from 130.50 to 136 in a day, a week. Might take a month, might take two, might take six. We shall see, but that's where it's headed. That's why we got in down here and we got in at 103 a few years back. And I've been long ever since. I am long the pound dollar since this reversal point. So, yep, I got up thousands of pips, got a big retracement, talked about rebuying at this zone. We're up big again as you buy into it or add to your position. And that's what I typically do over long periods. And where are we ultimately headed from the bigger picture? We're going way higher, way higher. This is kind of what I'm thinking, way up here around that 160, 165 area, that 1618 right there. That's where I think we're headed. See the big red arrow? But again, it's going to take years to get there. I said it back here would take multiple years to get up here. And several years later, even as we went from down here in 22 up to 23, I said, don't think we're just going to go straight up to this target. This is where we're headed, but it's going to take years to get there. And look at since that point, we've been going sideways for a very long time, since roughly July of 23 till we finally bottomed in January 25, and we're right back. It's still in this zone. Here it is, March of 25. So from July 23 to March of 25, long time. And we start breaking out. It's going to take even longer to get up here, but that's where we're headed. Amen. So in closing on the dollar index, euro, pound, I do expect a lot more upside in the weeks, months, and years to come. Not only the initial target 36, 37, 42, but the bigger targets 51, 55, 65 up there as we head much higher in the weeks, months, and years to come. But that's how we target, and we use the software accordingly. And again, for those of you that are using the software, here's the pound. What am I expecting this to do? This is going to keep slingshotting higher and higher and higher and higher. Over the years, we're just going to keep stair stepping, working our way up toward our target zone, which is roughly about that 157 up to 170, kind of calling somewhere about 165 ish. Amen? That's the plan. All righty. What else? Got a lot to cover. We have this interesting data for those of you looking at the markets. This is the CTA, the trading algos, positioning in U.S. equities, which is interesting, right? U.S. equities, Mr. Tucson. Look at where we are. Heavily short, 30 billion. That's in billions. We're down here at 30. Every time we get to that zone, we get market reversals, market reversals, market reversals. And what was this? COVID down in here. Remember the big market correction we had down in 22 and then the latest one in 23 before the markets ripped back up? And then we got this last one here. We got a big late coming into late 23. And then we went ripping to all-time highs again. Well, we're back in the reversal zone. We've been talking about this for a very long time as of recent, right? So let me do this real quick. Show you, I thought I had that open already, but I'm going to come over here, show you what we have in our archives. And my last class on Thursday, This is what we titled that class under our replays on demand. All signs point to a market bounce. This was last Thursday. Huh. All signs lead to a market bounce. What have I been talking before that? Expect a market reversal in coming days. Expect the ES to bottom somewhere around 5,500, 5,300. How about that? Okay. So, what do we see ES doing? It came down into that 55, 53 zone, and it did a reversal so far. Well, don't get too excited just yet, but all signs are leading to a big reversal. So, what does this tell us? We could see a trading algo short squeeze coming. Every time as we go back in history, and it starts with 2013 and it goes up to April. So we still got a little longer to go. I mean, it's about a month out before this is over. So this could go a little further to extremes and we could still maybe get that little fizzle rally and we dip more. But I hear a lot of people saying the S&P and all this, the talking heads, we're going to get another big down move. It's the tariffs, it's this, it's that. Always looking for a reason. Well, all these signs are talking about a reversal. And this is no exception. What happens when you get to these extremes? We go back to extremes, right? So even during COVID in this era, we had the bounce, then we got the pull track, and then we went taking off. And look at the markets when we were in that late 22, 23. We got the dip into late 23. All this, look at, we were going from extremes to bouncing to positive to extremes to positive. That was the big volatility in the markets. And then it went ripping, that big Santa Claus rally going into 2024, et cetera. Boom. Then we got the pullback most recently late. And then there's your big, this is the big Santa Claus rally here, late 23 going into 24. And then this most recent sell off. So that fits. You can go to ES, so we can look at SPX. What were those dates? You come back in here and you can see where these sell-offs occurred. Back in that late 23 was this guy right there. A big sell-off. We pegged that one, didn't we? Talked about it coming down toward the magic Fibbo and then a reversal back in that from roughly July 23 to October 23 during that stair-stepping lower pullback. Beautiful move. Look at this thing. Same time zone. We got these big swings in here. We got the dips. Then it went ripping higher. It went ripping higher. Then we got the other corrections coming in right around that same time frame. And you see it right over here. That was this one going in. And then most recently is this one now we're currently in, heavily negative, which is telling us what happens after we get down here. We typically get a big reversal. So this is just one more looking at equity positions right there, U.S. equity. The trading algos extremely negative and bearish. So this is a short squeeze coming, but this is how the market's run by these trading algos. So Mr. Tucson, I would not be shorting the heavily out of this market right now. I'd be doing the opposite. Well, we've been talking about it for days now. Come over here to the software, and we've been talking about that. You saw it in our classes that we expected these market reversals, and it started on Friday. Is that the end? Or are we still going to go much further? Actually, I passed it up back this way. But here they are. Let's go to S&P first. We got the reversal, daily turn and hook. Got that entry. So in the bigger picture, we're along the Russell, along the S&P, along the NASDAQ, and they're coming back. We got the entry. It's pulling back a little bit. So that's why I got to give it a little room to breathe based on support and resistance levels. But this is showing that this reversal is very likely to manifest to give us that big push into the mid 6,000s, 6,500, 6,600. It's kind of the target zone up here. And is this the absolute bottom? Well, we do have something that could maybe give us a big swing, and that is tomorrow we have right here, tomorrow we have FOMC. So I don't think he's going to do anything with interest rates. Nobody believes he's going to cut. Nobody believes he's going to hike. Nobody believes anything. But when he starts jawboning during his press conference, do we get a dip and a rip? Do we get just a continuation of the bottom reversal? Or do we get one more little push lower? Well, I kind of planned that well in advance when we talked about it on these charts a long time ago, stating that, let me move back over here, stating that, whether I'm looking at SPX or ES, doesn't matter. If you're a futures trader, I like futures because you get all that extra data. You don't have gap up and gap downs. But this is the reversal zone. So I won't say that I guarantee, Mr. Tucson, this is the absolute bottom. Would I be surprised if it is the bottom? No. Would I be shocked and dismayed? We get maybe a little push down here, then go up. This is my reversal zone. And I definitely think we're reversing out of here. Just because we bounced doesn't mean that's absolutely guaranteed to be the bottom reversal, but it's going to reverse in this box and it's going to go ripping higher. That is the plan. This could be the beginning of that. When do we feel real warm and fuzzy? The bottom's in place. When we start closing above that 618 back to the upside. So how do we do this? You stretch this out. You go back from the prior high to the current low, and that's right here. So from that prior high to current low, we need to get back above the magic Fibbo line, A, and then B, this basically 59 and change area. So the market's in order to prove itself. This bounce is great. Love it. I was counting on it. Kind of talked about it. Made some nice move up. But we have major resistance, and I'm going to show you why. Starting around where we are at 5,700 area. Obviously, with the daily magic Fibbo, we have the 58 to 59, 57 right there, 90 up to 58.30. That's this line. These dark numbers right there is this line. So that's a resistance zone. And then we have the 618 off that bigger move from the prior high, actually this high, to this low. Same thing, it was like a double top. But from these highs, that magic Fibbo, this is the area. Once we start breaking above these levels, then it's game on. We're going to go ripping when we start closing above this 59 and change area. Everybody good? What are all these battle zones? Guess what it is? It is the magic Fibbo. You come down further down and you look at, where's my 1 hour? Well, we already broke the 1 hour and we're retesting it. That's exactly what we like to see, right? We love to see the rally up, break it, come back to retest, find support to go ripping higher. But that's why we found some resistance initially was the 1 hour. Guess what that is? You continue to watch the levels. We go to a 4 hour. We still got this 5,800 level. So remember I showed you on the chart a minute ago? Well, we got to break the 57 we're testing now. Then we got to break the 58 area, which is the 4 hour. We got the daily sitting right in the middle of this area. And once we clear that hurdle, here's the 618 to the upside. Man, that thing's going to go ripping. 62.60, 63.40, onward and upwards to 66. So this is where I think we're headed. We eventually stair step between these lower time frames. We'll go through each time zone, right? Come down here, actually up here, 30 minute. Where's the magic Fibbo? We broke the 30. We broke the 15. We broke the 30. We broke the hour. What haven't we broken? The 4 hour. And this is typical when you see these types of move. You break it, you retest it, you go to the next extension, you come back and retest it, you go to the next extension. But there was where we broke the 30, tested it, retested it, was former resistance, broke above, came back, found support, went on to the next level. What did this run to from the 30? Went up to the hour. It's amazing how this thing plays out. And we ran up from that test, broke the hour. Now we're retesting that. What's next? 4 hour. Still got a little ways to go. So, Mr. Tucson, we're not home free yet. I expected a reversal. We got some sort of bounce. That wasn't too shabby. From 55 to 57, that's a nice big move. I know a lot of futures traders that die and go to heaven with a point or two. Well, that was a couple of 100 points based on a bottom. Is this bottom likely in place? It's too early to call, but when we start breaking above that 5,800, then we got the 59. So we have those different levels we have to take out. What happened on the initial bounce? We started to take out the magic fibbo on the lower time frames. So we started with the 5-minute first. Got to come way over here. We started to break above, retest, went higher, retest, and started climbing its way up. But once we broke the 5, we then broke the 15. When we broke the 15, this is part of what? Friday? Starting to get that rally reversal. We broke the 5, we started breaking the 15. Then we started to move. Once we broke the 15, where did we rally up to? The 30. Got to have this magic fibbo on there. We broke the 30, we retested it, went up to what? The hour, and broke the hour eventually. But that's what you talk about stair-stepping beauty. And this is why this magic fibbo line is so incredibly important. So in every case, we saw the 5-minute break retest to go higher, right? We saw the 30 break retest to go higher. We're watching live as we speak. Or broke the 1 hour, we're retesting. Is this where we find support to go breaking higher? Well, if this thing's going to grow legs and we're really going to start ripping higher, this is a good area for this to hold. It's a former battle zone, former resistance, turn support, looking good. If it can hold, then we go ripping up. What's the next target? Next target's will be up here around that 5,800. Take out the prior high, we go up toward that 5,800 level. And what is that? The next magic fibbo level, 4 hour. There it is. So watch this closely. Well, when do we start to think, uh-oh, maybe we got to go, Gary, you said maybe we reverse somewhere in this target. And what if this is going to be the low and we actually get one more new low in here? Maybe it's Mr. Powell speak tomorrow. Could be. Maybe we just get a dip and a rip. Maybe we don't come down here. But when would I start to feel we need a new low? Well, you use the fibbo in the opposite direction. You extend this out and you get the latest price action and you take a fibbo from the swing point low up to the swing point high. And you say, as long as this area holds, we feel comfortable that this baby's going to go higher. This is the magical level right here, the 618. So any retracement holds the 618, continue higher, I'm game. Do we have to go down and touch that 618? No, because we could be bouncing off that 1 hour magic fibbo to go higher. But as long as this decline holds this area, what is my level in the sand? You know, it's the 618786 level. So let me get this out of the way. Here's your support zone between this 50, basically 5,600 down to about 5,560. So about 40 points or so. That's my 618786 zone. So as long as this remains support, we believe there's no reason that this bottom reversal is still intact, right? No reason to believe it's not. We'll turn this green. And okay. So as long as this support zone holds, we're good to go. And then once we hold and break out, what's the next level? The 4 hour up there, sitting about that 5,800 and change, 58, 58.30, 58.40, 58.20. See it right there on ES. Everybody see it? So, Mr. Tucson, what do I expect to see in the coming days when this reversal is truly intact? That we're going to break this 4 hour. We're going to, keep stair stepping, working our way to the 4 hour, eventually break it, retest it to then go higher. And when we take out this 59 and change. So what is the whole point of this exercise? We're stuck in major resistance between that 5,700, which we tested and kind of retracing back from, all the way up to 59 and change. So that 200 plus zone, which is a pretty big zone for those of you, 200 plus points is a big zone, sure. But this is the area of resistance. I didn't want to move that. I meant to move this other. But I'll just take that off and we'll replace it in a moment. But what we're looking for is this big resistance zone from that 59 and change down to 57 area. So all of this is major resistance, but once we break it, game on, we're going much higher. Amen? This is resistance. So what are we stuck between right now? Support, resistance, support, resistance. So even if we get a pullback today, after this big run the last few days, no reason to believe we don't get a little bit of pullback. I would watch tomorrow when FOMC announcement, we do the post announcement and Mr. Fed speak. Do we get a dip into this zone and it holds to go ripping? Is it such a bad thing, he says, we do come a little bit deeper and we actually break the low? Well, when would I consider we're going to go lower down to maybe 54.70, 54.50 area? If we break below this swing point right there. Basically that 55.60 area, we break below that, then we're likely coming test the 54.80, 54.50. But I still think this is a very good chance that this bottom is in place. Amen? When do we change the tune? We pull back and don't hold the 618, 786 support zone. Then we start shooting for the 1448, 1272 to the downside. If this holds, what is my target to the upside? First target is going to be my magic Fibbo on the 4 hour. Basically right now, you see it does tick and change, but it's 58.40, 58.20 area. Any questions? So we get a bounce. We go on to 58.20, 58.40. We break that. We have that 59 target up here, which is, go back to the daily, that 618 retracement level off of the bigger move. So I'm going to move some of all of this and put some fresh lines on here for you. And I know this is somewhat confusing when you see all those lines, but this is why we track this every day. So from the bigger picture, our all-time high down to the current swing point low. When do we get very bullish? When we start breaking this 59.20-ish, 59.30 area, right up there. So when we start taking that out, it is game on to go where? 52.60, 53.50, 55.80, 65.80, sorry. 62.70, 63.50, and 65.80. So this is why I still think we're going up here, but do we need one more flush or do we start stair stepping now? And if you want to wait and be real conservative, allow us to close above that 59 and change. And then you could start shooting for 62.60, 70 plus plus 63.50. And I think we're going to reverse somewhere in that 6,400 to 6,600. My big call on this, not a prediction because the prophets predict, everybody and their brother predicts, from the meteorologist to every other Tom, Dick, and Harry. They're talking, my prediction, my prediction, my prediction. Well, that's for the prophets. I anticipate with the best of them. So my call still stands. Before we break 7,000, we're going to break 4,000 to the downside. So we kind of expected a pullback here. And now I expect the bigger run. If you've been watching this on the last several weeks, we talked about having a dip in here, then a big run up to somewhere in the 60 plus mid 6,000s. Then we're going to get the much bigger move down below 4,000. And where does that line up? It's all about the magic Fibbo. You got to have a magic Fibbo. If you don't have a magic Fibbo, you don't have anything, right, Mr. Tucson? Without the magic Fibbo. So right now, the only magic Fibbo line below my 4,000 target happens to be the monthly, which is down about 33 to 3,500 zone. So what are you telling me? When we finally rip up into the mid sixes, we're going to eventually start coming down. It could take a couple of years or so to get down here. I'm not saying, ooh, as soon as we hit 64, 6,500, Mr. Tucson, you're going to be down here at 3,500 in a matter of a week, a month. Might not even be a year. It'd take a few years. And you know how the markets, when they come down, I showed you a moment ago, you get that beautiful stair step kind of thing. It doesn't just go straight down. You get some, retracements in there. Likely even get a little 618 retracement for a further downside move. So that is coming. So in closing, is the ES over? Well, again, we have several reasons why. Software setting up reversal. We talked about that. We gave you a zone where we thought it was going to reverse. We're in it. Then we look at our other barometers that we use as oscillators, and notice the 5 days recovered. These were all in the dark colors. Look at the 5 days. That's on the S&P index. 20-day. Got the reversal, and when you get to extremes down here at 20 and lower, you get a reversal. It. So we talked about these, all signs leading to some sort of reversal. Here's the 50-day. How many companies above the 50-day moving average of the S&P 500 stocks? And we dipped down. We didn't quite get to a new low here. So this is also looking like a what? A low, a high, a higher low. And typically once we get to the extreme lows, where do we go? Back to extreme highs. So this is setting up as well, Harold, that we're likely going to get a higher low, higher high, and looking for this thing to push into the what? 63, 64, 65 as this baby reverses. Let's go back to this one and go to the 200, which is even a slower moving average, obviously. Only 42% of the companies in the S&P 500 are above their 200 moving average. So we got a long way to go. Last thing we touched was extremes. We haven't touched extreme lows. We did that, then we got to extreme highs. So typically after the extreme lows, you go to extreme highs and then you come back to extreme lows. Well, is this possible that this baby could rally? We go up to 6,400, we come back up near these highs again. Then we come plummeting all the way down to these lows. Yeah, that's certainly possible. This is still an uptrend of higher lows at the moment. We got an uptrend of higher lows that we dipped and went up. We dipped, we went up. So what might be lacking here, Mr. Tucson, is we start ripping to that 64, 6,500 zone. This baby goes reversing way up here to extremes. And what happens when you get to 90 and above? Kerplunky, we come back down to these far extremes. So this is what I'm expecting to see when we get up to 64, 6,500 area, all-time highs, which is the plan. we're going to be at these extremes up here. And then what? After that, we're going to get that big correction back down, in which we go from that mid sixes to below 4,000. And this baby's going to go from extremes down to far extreme. Now, this is how many companies above moving average, in this case, the 200. So you never go below zero, and you obviously never go above 100, because how can you have more than 500 companies above the magic, in this case, 200 moving average level? It doesn't. That's why we call it an oscillator. So this is an oscillator that shows the 200 moving average. And this is what we warned about. We got the dips in the last year, and then we went ripping higher. We got the dip into this year, and I still think we're going to go ripping higher. And we're probably going to go make a new high, come up somewhere at this 90 level as we start grinding into the mid sixes, 6,000, etc. And above, 66 is probably my top, 64 to 66 range. And I see us up in 64, 65, 66, and our barometer's way up here above 90 and higher. That is screaming, look out below, as we then look for that 6,600 area, 65, 64, whatever, turn into below 4,000. And then we'll see this guy below 20 and lower, probably even pushing 10 and lower by the time we see those lows. Got it? All right. So when I talk about all signs are leading to a market reversal, even this guy, last place, we still got this uptrending line here. If you can bring it in, touch as many as we can. We got an uptrending line, likely going to get the push higher as the markets go ripping to all-time highs again. And I would expect we come back to 80 or higher if we start pushing 90 or more. When you don't stay up there long, once you do, and you typically go back to the opposite extreme. So all we use this for when we're at 20 or lower, especially 10 and lower, that's telling you should be buying. And when you're at 80 and 90 and higher, look for the market to correct. Well, this one had the big correction most recently, and we're still at an uptrending highs on the big 200 moving average. So this is why I think we're probably going to run up here. And then when we're in the mid 6,000s in an area, we're then going to come back below 20 and maybe even 10 or lower. These extremes down here, 20 to 10. Remember, it never goes below zero, never goes above 100, but we should see this far extension down here when we start heading down to 4,000 and lower. Amen? So even with the big pullback we recently had, ooh, it's so negative. The CTAs are bearish. 30 billion on the negative side. We only dipped down to 30%. Still over a third of the companies well above their 200 moving average. That's telling we were likely going back up, just like we did over here. We had a big rip. We didn't quite get to extremes. We came back down. We then got to extreme. Now this is another higher low. And I think we're going to go even above this extreme and start pushing this over here before we get to our mid 6,000s. Got it? Well, 64 to 6,600 range. Where does that come from? It comes from this right here. When you zoom in, this is the monthly, but we'll go back to the daily. Zoom in, and this is where this comes from. The recent high to low, again, when do we get a warm and fuzzy, Mr. Tucson? When we start taking out this 59 and change. Because we start to get a daily candle body close above this zone, that 618, and it comes from what? That high, this recent low. When we start closing above 5,900 area, then it is game on for what? 6260, 6350, and maybe feisty up towards 6580. So what happens? Those people that trade ES in a longer term picture, you get above 59 and change, expect 75%, we're going to 6260, 70 plus percent, we're going to 6350, and we might just push the limit and push us up toward that 65 zone. But this is why I think this reversal zone is where we're going to reverse from. And this is going to be the big move down, and we're going to get that barometer to go from extremes down to lower extreme, and it could take a few years. This thing on the 200 moving average, see, it's the 200, call that S5TH. And this bar chart is free. You don't have to pay a subscription to get these. I just go to bar chart, show these in our classes, as you well know, and we can see that this takes time. This is a much slower moving average. So let me go out a little further and give you a bigger picture. A 20-year zone, it takes time. And I'll bring this even more condensed and bring this up this way so I can see these levels. 13, we bottomed in 15, couple of years. And this one was 18, much quicker going into COVID. So that was a much faster one. This one was COVID. That was very quick, but typically it takes a year plus, sometimes 2 years. This bottom here in 22, we didn't top out till 24. So this is slower moving. So this is why I'm thinking, even if we do get what I think, and we come back to, didn't mean to click on that, but we come back to this area and we push back up toward the upper quadrant over here, market reverses. We go pushing into that 62, 63, maybe 65 area, and we get back to extremes up here. How long is it going to take us to get from this big extreme down to these lows again at 20 or lower? It could take us a couple of years to do it. Amen? Got it? So what does that put us on the chart? From 63 to 6,600 area, 64, 6,600 area, down to below 4,000. I don't expect it to happen overnight. And what is down here, this big green box? That's the magic Fibbo line on the monthly chart. Amen? So be careful. I'm extremely bullish. Where everybody's still bearish, I'm extremely bullish for a reversal. And we're going to push, we're going to stay below 7,000, and we're going to go below 4,000 before it's done, right? Below 7, down below 4. And where's a good target below 4? The magic Fibbo line down there. And again, this number moves. It is a moving target. That's why you need to have that on your chart so you can keep up with it. But currently it sits between that 33 and 3,500. So my green box, it needs to be adjusted just a little bit. And again, it will continue to move slightly as time progresses. But this is the zone right now in that area. And it is sloping upwards, but as we start to climb higher, probably keep that slope a little bit. But then when it starts correcting back down, it starts to flatten out a little bit. So that's the plan. We're going to go up into the mid sixes. Then we're going to start breaking down over a couple of years down toward the magic Fibbo, which will be below 4,000. Amen? That's the big picture. What about NQ? Same thing. It's doing the exact same thing. I think we're going to go to these extensions. What are my extensions on this? 24, 25, somewhere between 24,000 and 26,000 is where I think we're going to reverse. As I zoom in on the bigger picture, you can see from this bigger picture, I do think this is going to be another higher low, higher high to get up here. And then we're going to get the big one coming back down, and we're going to look for it to come somewhere around that 11,000, 10,800 to 10,000 range. Are you crazy? The NASDAQ is going to go from like 24, 25,000 to 11,000, something like that. That's kind of the plan. And again, this is sloping upward. So if it takes a few years to get there, maybe this thing's at 13,000 or 14,000. But we shall see. So zoom in on the current price action. Well, I want to make some money today. What's happening? Well, Again, we got the beautiful reversal we talked about, but until the NASDAQ does something, we can't get too overly bullish because we do have major resistance, and it's doing the same thing with the magic Fibbo. It breaks the 5 minute, goes to the 15, finally breaks that, goes to the 1, it finally breaks that, goes to the 4, it'll break the daily, and then we start ripping higher. So we still got to get above this 20,000 and change, 20,004, 20,006 level. That's the daily magic Fibbo right there. Yep. So what are we running into resistance here? There's a magic Fibbo line in its path. That's why it hit this and reversed. Let's see which one it is. 4 hour? And my 4 hour didn't quite reach that one. So here's 20,000, 20,005, 20,006. We eventually got to break that, probably retest it to go higher. So which one are we hitting and rejecting from? Probably the hour. We broke above. We're kind of breaking back below. See it? Interesting, isn't it? How this comes into play. And it's struggling to break the hour. Now we're back below it. So far, so good. But until we start breaking back above the 4 hour and then the daily, then we could start talking about 24,000, maybe 25,000. See the 4 hour right around 20,005, 20,006. The daily's not too far behind, right there, 20,004, 20,006. So they're kind of overlapping. And when do we get real bullish? When you do what? You take the last swing point high to the last swing point low. And when we start closing above 21 and change, kind of this little battle zone over here, form of resistance, support, 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 kind of in that zone, we open the door to 22.8, 23.2, 24.3. That. So, Mr. Tucson, I definitely think we're headed up here into that 23 to 24, maybe even a little higher. Got my bigger target a little bit higher, as you can see up here, this target zone. So when do we start getting up into that zone? We got to take out the magic Fibbo, number one, on a daily. Then we got to take out that 618. Then it's 75% chance we go to 22.8. So that's a big move. See it? You take out that 618 right around this 21 and change. We start taking that out. Then we have a 1,700, 15, 16, 1,700 point move. 75% chance when we start closing above this 21, say rounded off 21.2, we're going to go to 22.8, 1,600 point move. Bingo. Highest of probability, 75% chance. Well, in the interim, could we make a lower high and another lower low? I said this back too. I think we're going to reverse in this zone. What is this zone? It's the magic Fibbo zone of a 3-day. That's the bottom right there. This is the bottom of that zone. And this support zone was tied in with the bigger degree 618 retracement zone. So this is why I think we were going to reverse in this area. Is this the reversal? Maybe. Maybe this bottom's in place. What else did we have with all signs? Was the seasonality charts. Showed you all last week and the previous week. All the seasonality charts say from mid-March through April into like May, we should see seasonality say we're going higher. That's another reason. The software said we're going higher. Seasonality report said we're going higher. Our barometers, now this is for the NASDAQ, our barometers are saying the same thing. Let me refresh that, pull it up. But the barometers are saying the same thing. This one, we are near extreme. And the last place we touched was extreme low. So this is likely going where? Well, I can tell you exactly where it's going. The NASDAQ starts getting down 23,000, 24,000 or higher, this baby's reversing and going up to 80 to 90 zone. The last place we touched was this swing point low. We went from the high to the low. What's next? We should go back to the high. Amen? So is this the bottom reversal? Maybe. Maybe this is the beginning of the low, the high, the higher low. And we kind of do that check to go marching on up. And what does this mean? How many companies of the NASDAQ 100 stocks are above their 50-day moving average? Right now it's at 26%, 26 and change. Amen? So this is setting up a reversal. When you go across and we use the big heat map, let me get this out the way, and we go back to the heat map. This is why I love this. This is called the stock market and sector performance. Here's all the S&P sectors and where they stand, each one, 5, 20, 50, 100, 150, 200. So you can click on either one of these. It'll show you that little graphics with the extreme highs and lows, but you can just see the numbers right here. And then you say, what about Russell? There the numbers are there. Same ones. And then the Dow, same one. And then the NASDAQ, same one. And last week or so, when these numbers were all very red and dark, look at the 5-day. Been moving higher. That was part of the, we need a bounce. And the bigger picture says these are at extreme. We need a bounce, right? We need a bounce. That we need a bounce. These are at extremes. So this is why we believe we're going to get that reversal to continue. Now, Harold, I can't promise that. What if Mr. Fed speak tomorrow, jawbones, and says some very hawkish or bear? What I love about the media now, well, Fed speak was hawkish. Fed speak was bear. You know, it's insane when they talk about this because it goes up, it goes down, and it's always some excuse. Well, look for the reversal. We may have already made the bottom. And even if it dips on his speak, I'd buy that dip because I do think we're going up into the 22, 23, maybe 24. If we get real feisty, maybe this upper quadrant here, 24, 25. And what's the difference? It's prior high to low, and then this one from the low to the higher low, that gives you a little bit extra. And then from the recent high to low, it's a little bit lower, but it's still screaming we should get to 23 to 25-ish zone. That's what this big box is about. This is where I think the mighty NASDAQ, we're going to rip up there, and then we're going to get the big rejection back down. Amen? So we need to be mentally, physically, and spiritually prepared for what's to come. But in the short term, we're definitely at or near a bottom reversal if it hadn't already done so. The most I think we would dip down to, even on some jawboning tomorrow, we get a little dip and an initial rip. But right now, so far, so good. So on the lower time frame, what's an area of support we really should hold? Well, you come to the latest bounce from the swing point low to current swing point high. It's typical you test the 618 retracement. So far from the low to high, we tested the 50%. We did not test the 618 yet. So here's the line in the sand. If we're going to continue to go higher, then this area must hold. Right there. My 618, 786 zone must hold. I'm going to get that out of the way, and I'll change this to green just so it's color coordinated. I like color coordination. So NASDAQers, are we likely going way up? Yes. Even if we get a push lower, we're going higher. My humble opinion. We will achieve these targets. No ifs, no buts, no ands. And this is in my humble opinion. We're going to get up here. Is this the bottom reversal? Maybe. It looks good so far. Yes, we got major resistance to take out. Like where the daily is, sitting up here at that 20,004, 20,006. And from the bigger move, high to low, still got to take that 21, say 2150, 21.2. Why did I say 21.2 area? Because you look at where these wicks are in the support zone. So it's right around that 21.2-ish level. So once we take that out, it's kind of a little battle zone area. Once that is taken out, well, a good sign, we close above the magic Fibbo. That's good. We're likely going to go testing that. Once we close above that, then it is game on. 22.8, 23.2, 24. And this is on the smaller scale. The most recent correction from high to low. You take out the 618 to the upside, you have a 75% chance you're going to go to the 1448, and a 70 plus plus, you're going to go to the 1272. Amen? All righty. So seasonality says that we're going to go higher, or our barometers say we're going to go higher, and our software says we're going to go higher. Daily's reversing, starting to push higher. My weekly is about to start engaging back up. So we kind of drew this. I didn't expect that the NASDAQ and the S&P were going to make full weekly cycles down. I suspected they would slingshot higher, higher, higher. Say, look, we've been slingshotting ever since this bottom reversal here. What did it do? The weekly went up and started this large slingshots, little slingshots, medium-sized slingshots, large slingshots, small slingshot, but slingshotting higher and higher and higher. So even on this retracement, I wasn't feeling we're going to get a full weekly cycle down. But what if, William Bruce, we do get a little bit more doom and gloom? We go just a little bit lower, seek out the magic Fibbo line to bounce and go higher. Man, if I can get a weekly oversold again, salivate city to reverse. But I think we're going to end up slingshotting higher. And this will turn back up, and it'll do kind of like we did over here. We started to come down, we turned back up. Money flow was way up here, money flow is right there. We slingshot up, big, beautiful move from that low to that high. Those are those same extensions. From that low to that high, extensions. From this high to this low, we're going to get extensions up to the upside, which are right there. 22.8, 23.2, 24.3. Everybody seeing it? So what is the resistance level in its way? It's the magic Fibbo line. We're retesting the hour. But this is why the markets always react in these zones. So when I'm trading this, whether I'm trading futures or however I'm trading this, and I'm watching, I want to know where my levels are. And I typically draw those on a chart. So I'd go like to my 5-minute, start from the beginning, and I do a 5-minute and say, okay, where's that magic Fibbo line? So my resistance level is going to be, let me use something to draw here. I guess I'll use this little guy here. So right now, we have, oh, didn't want to, there we go. We have, that's where the 5-minute magic Fibbo is. Then you go to 15, and we have, these zones are going to be tough to crack. Here's one here. And then we see the 30. And when these things start to line up like this, then you expect that there's going to be major resistance in these zones. And then you go to the hour, kind of sitting at the same point. So it's overlapping. Notice? So what is this screaming, Mr. Tucson? NASDAQ has got a lot of resistance to break back through. It did it initially, and it's kind of retesting some of the zones. And we go to a 4-hour, which is way up here. So when are we all clear? Not until we start breaking all of these zones. And then the daily, show you how this all plays out. Daily and 4 hour pretty much on top of each other. See it? So we have to take out these little smaller zones first. Then we're going to go back up here. And then when we break that, we got this big resistance zone up here at the 618 retracement. And when that's finally over, game on. Amen? So A, we got to get above the magic fibbo. B, we got to get above this 21-ish level, which I like the swing point up here, which is that big battle zone right there. So when we finally take that out, then we have upwards of 21.6. Let me get that number again. 21.2 up to 22.8, 1,600 point move. Right around that 22 up to 21,200 up to 22,800. That's 1,600 points. That's huge. And that's where we're going. In my humble opinion, Mr. Tucson, James, Ian, Harold, Emil, all of our archivers, we're going up here. No questions. Only question is this bottom reversal intact. I'm leaning more and more that way. As long as this little support zone holds, we're going higher. Yes, as long as our little support zone holds, we're going higher. What if we go lower? Then you use the low to high, you target a little bit lower. It's still going to reverse within the bigger degree, 53 to 55. So even if we did one more flush due to maybe Mr. Powell speak, we'll flush down to there. But if we hold this zone, we're going to go up here. We're going to break these resistance levels. And once we finally clear that hurdle, and again, we got that battle zone, but we start closing above, say, 59, 50, 6,000 because of that swing point. Start closing above 6,000, you got a 269 point move, 75% chance. We got a 70 plus plus. We're going to go up another 350 points when we start clearing 6,000. Got it? In the short term, watch this 5,600 down to about 55.60. As long as we hold that dip, we should then rip toward the magic fibbo. That would be target 1. Target 2 would be up here at that 618, around that 59 and change. We start closing above that level and that swing point, which is a battle zone coming across here. Former support, resistance, support. So we start closing above that. So we got target 1, target 2, target 3. Then it opens the door for the big move, 62.70, 63.50. Amen? And if we get real feisty, up toward that 65.80. NASDAQ, same thing. We definitely have major resistance we got to go through. But when we finally start to see this thing grow legs, as long as we hold this support zone, we believe the bottom is in place and we expect to go up and test this. Then we'd probably get a little pullback from there. But what I'd really like to see is a break above the daily, come back and retest the daily, then go ripping higher towards our extensions up here. Amen? Everybody good? So, Mr. Tucson, if I'm going to draw the picture in the future, I think we're going to stair step our way, eventually break above this guy, come back and retest, and then we're going to start to climb our way up toward these targets. Is this in place? You know, I would say yes. And I would say we have extremely high probability. Obviously, this low is in place as long as any dip holds in this low support zone, and then we start ripping. Once we start closing above that 618 level up here, then we could, without question, put a check mark down here and say that low is definitely in place. When we start closing above the 618 retracement, highest of highest probability, which puts us at 75 plus percent. We're going there, and that low is intact. Got it? Amen? But we talked about this reversal happening because of seasonality, because of our barometers, because of our software. Everything was screaming, it is time for a reversal, right? Off of the daily. So what did we do? We set the trade management system to enter the trade on this trigger, and we're in. We're just kind of bouncing. We were up. Now we're just kind of right at break even at the moment. And I'm looking for this thing to go much higher. And my take profits coincide with those target zones up here at 2350. That's the upper one, 22.8, 22.6. Those are those original targets we had talked about. So I do think that's exactly where we're headed, Mr. Tucson. Is this low in place? More than likely, but you need to give it a little wiggle room below this support zone. So as long as you put your stop loss below this area, I think you're fine. And I think we're going up here. All trading involves risk, substantial risk of loss. So no buy, sell the whole recommendations. It's based on technical support and resistance levels, and based on the software, based on my ability to read and interpret price. But we pegged the bounce, and you probably made a nice little stipend from that. I would be in a position of authority that if it breaks anything below this, I would wait till it gets a new low, then go long again. But you're sitting in a position of authority. What does that mean? When you're in a trade, you move your stop loss into profit. So even if it goes the opposite way, you get pipped out for more profit and you're good to go. Yes, I think we're going much higher. So seasonality says we're doing it. Software says we're due to go higher. And so far, so good. We're stair stepping. And even on the pullback, we're holding the magical levels. So what happens in the next move? Well, Mr. Tucson, we just use the Fibbo and follow. If this ends up being a higher low and a higher high, then we just take this and we go up toward the magic Fibbo level. From this low to this high, then we watch that 618 level and we kind of move it up accordingly. Once we get to the magic Fibbo, then our upper support level goes a little bit higher and we get deeper and deeper. When we break and confirm support, we continue the process. And again, from the high to the low, we start taking that 21 and change, say 21.2 out. Once we take 21.2 out, then we have about a 1,600 point move. 75% chance. How often do you hear that? Hey, by the way, the NASDAQ has a 75% chance you're going to get a 1,600 point move. I like those odds, Harold. I love them. Yes, we got some more to prove. And yes, I warned you about a bounce. Can I guarantee this will not go lower? Nobody can give you any guarantees. But it's looking more and more likely, especially as we pull back, we hold this support zone, then it's game on for what? We get a 618 retracement, we come back to that zone, we go up to the next magic Fibbo line, which is there, we break that, maybe we retest it, then it sets the tone, we're going to this extension. When what happens? We close above 21,200. Then it's game on for us to go 1,600 points higher. Now, what it doesn't mean, hey, we closed above 21,200 today. It doesn't mean every day we're going to go straight up like a rocket and there's never any pullbacks in here. Price never moves in one direction. It always stair steps higher, stair steps lower. Amen? And those algos are extremely short. So this is why I'm not giving up the chance that maybe we go a little bit lower. But even if we do make a lower high and a lower low, we're still going to go to the next extensions, which is still in my reversal zone. Amen? So after the fact, we'll say we gave you this reversal zone in advance. And after the fact, when we're up here, the probability it reverses in that zone I gave you is extremely high probability. And the only question is the bottom now already in place? And again, the answer is as long as this little battle zone right now, right there holds, then we're good to go to say yes. And then when we start breaking the magic Fibbo, we get real warm and fuzzy. And then it's a slam dunk when we start closing above 21,200 that we can salivate for the next several weeks to months or whatever for us to rally toward that 22.8, maybe 23.2, et cetera, et cetera. And maybe we even get so feisty we go to 24, 25. Any questions on that? Buy the dips. This was the big dip I talked about. You should be sitting pretty if you traded that bounce. So far, I'm buying the dips, any bigger dips. Even if we come down here, what am I going to do? Add to my position to go along. Add. What if it crashes? It's due to go there before we're due for the big one. And again, we got a lot of things going. The software, the seasonality, technical picture, all of these parameters. And all of this crying about tariffs. Oh, it's tariffs. He's killing the American people. The tariffs are going to make everybody cost more. No, we got to fix the broken system. That has to be fixed. But this is just a typical little retracement. We get them all the time. Over the years, we always get these retracements. It is not out of the question. So when they start doom and glooming when the ES did a 10% retracement, I got to laugh. That's why you use the software, you use the technical picture, you use these Fibonacci retracements. It's typical. You get these type of retracements. Amen? All right. Last one we haven't talked about is the Russell. Again, I think we're bottoming, reversing on the Russell. And I don't mean reversal to new highs. This is the only one I don't think we're going to make all-time highs. I think we're going to start moving toward that 2,300, maybe 2,330, 2,340 max. So definitely think we're going to reverse and start heading toward the magic Fibbo and maybe as high as the previous battle zone over here, around that 23 to 2,400. So when everybody else goes ripping to all-time highs, like ES goes to that 64 to 6,600 level, NASDAQ goes to that 23 to 26,000, 23 to 25,000 level. This guy is going to go ripping, but it's going to make a lower high, and then it's going to set the tone for the bigger down move in which everybody goes. The Dow goes from Dow. The ES goes from the mid 6,000s down below 4,000. NASDAQ takes a big plummet, and the Russell is going to take a big plummet. Amen? I'm trying to give you the big picture, small picture, and intermediate picture. This was our reversal zone. We talked about salivate country to buy here. Beautiful reversal out of that. So is this thing bottomed in reverse, Mr. Tucson, Harold? It's the same thing. You stretch it out so it gives you some room to navigate. You go from the swing point low to the swing point high. And as long as the Russell holds this zone here, this should be our reversal point. Now just a touch more. So as long as this push higher holds this zone, then it's onwards and upwards. What can you use in that case? You can use a 3-point tool from the low to the high to the higher low. Let's say it does come down and give us a 618 retracement. Then my targets would be what? 210, 211, 212. Up as high as what? Maybe about 215, 220 up here. So I clearly think that not only are we going to do this, but that we're likely going to continue to at least test the magic Fibbo on a daily to as high as the big resistance zone off the prior move, which is this 230 level. See where we tested so many times. Test, 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 failed. Over here, test, 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 failed. So what are we saying for the Russell? We're going to get a move at least to the magic Fibbo, if not up toward this 230 range. Got it? And that's a nice little reversal from below 200 up to 220 slash 230-ish. But that's what we're seeing. Let's continue. What about black gold Texas tea? We're struggling, Dan and others. I've told you about this. I thought we'd come down in the 65, 63 range. We bounced and been chopping. This still does not look robust to give us the big up move yet. I think we're due for one more flush, and the flush should go back to the mid to low 60s, not even mid, low 60s before we're done. And that bigger picture we talked about last multiple weeks is this prior move. If you give me a moment, I'll bring that into perspective. But this is the bigger picture. And those of you keeping score Elliott wave style, I believe that that high to that low is our big A. We're working on a big B up in this direction, somewhere between that 95 and 105. So somewhere in this area will be our big B. When we finally get up there, we're then going to come back down to our big C. So this is big picture. A, sideways chop, making a B, and then we're going to come down in C. This run from this low to that high is our little a. All of this overlapping, chopping, overlapping, just muck and mire, gobbledygook here is the little b. And that's why I think we got one more little push to get this little b. And once that's over, we go up in the little c, which is back into the area of this little a. So we're going to get this little c. So I'm looking to go long black gold when my weekly reverses and starts moving up on the software, and we shoot for this 90 to 105. I know it's $15 range, but we should get somewhere between 90 and 105. At which point that would be the A, the big B, and then we come back down in C. So come over here to the software weekly. We're just looking, actually weekly, we're just looking for this weekly to start reversing. It's oversold. And Mr. Tucson, we're ready. And I had to close my software and restart my computer. So I'll click that, go back ready to trade. But we're looking for this thing to go long in the coming days when this baby reverses. Amen. So once you're in ready to trade mode, it'll automatically enter the trade for you. This is telling those right there. The yellow arrow is take profits trigger. Like if you're short, you better be taking profits. Well, I still think we may get one more push lower, let this thing finish, then it reverses. But that's part of that what? A, little b, C. So A, B, C. So that's why I did it over here to make it a little bit cleaner. But that's the plan. So I want to buy this dip. And currently, as you zoom in on current price action, this bounce, I don't think is going anywhere. Kind of warned you about that, that we're due for a one more flush lower. I expected we would get to 65, 63 range. We did that right there. And that might be the end, but it just doesn't feel right. We likely need one more flush lower, not only to come lower to this next target over here, but to take out this prior swing point. That would set the tone, right? A big move up, we got the big move down, and since then we've been chopping and overlapping, making highs, higher lows, lower highs, higher lows, lower highs, higher lows, lower highs. So what do we need to correct this problem? All of this motion here. This is why this is likely that small B wave, because if this was A going up in that big B right now, you wouldn't have these overlapping lower lows, lower highs playing out. That's a B wave playing out right there. and that is the A up, little b coming down. That's why I think we got one more flush to come down to make a new swing point low. And when we make a new swing point low, it'll then set the chart up to make that big run. That's the plan. So be careful on any of these smaller bounces until we get one more flush. I warned you about this for weeks, all this overlapping chopping action. This is not conducive to this go ripping to 90 and 105 target up here yet, between 90 and 105, but it probably needs one more flush to get to these extensions, get to the new swing point low, and it could be just an intraday wick and reversal is fine. So bottom line is what? Join GPA Trading Services. Get the software. When the weekly reverses, go long and look for a nice trade to the upside. The weekly, the monthly, everybody's getting it oversold on black gold Texas tea, screaming, we need a big run. We got some smaller runs. Now it's time for a bigger run. Down from the mid to low 60s up to the 90s. Good $30 run. Amen? That's the plan. So in closing, be careful. It's possible we could have bottomed. We did reach the extension. It could be over. But based on that previous hanging, as I said years ago, at the hanging Chad on the election ballot, well, with that hanging swing point low over there, I think we need one more flush to set the reversal. What am I going to buy when the weekly turns and hooks and we get that entry point? And I'm going to be shooting for the 80s, upper 80s, 90s, and as low as maybe 100, 105 would be the highest. So with that, let's continue. James, you got to go. Take care. God bless you. We love and appreciate you. Gold is breaking out. Be careful. Why am I saying be careful? Because we reached the 3,000 target we had talked about for the longest. I was hoping we'd get one more flush so we could buy low, but looks like we're obviously breaking out again. What I'd love to see here, Mr. Tucson, is designating we got the breakout, yes, but I'd also like to see this latest move. We get a 618 retracement in here, setting the tone for our 31, 32 targets up high. Same thing with silver. I'm not going to short silver, but we reached the extension. So what happens after extension? You typically get some sort of retracement back down. And we got what I was looking for. We broke above, we retested, we shot up. I was hoping this retest would go a little bit more. It didn't quite do it. We then went breaking. That's fine. But be careful. Now that we reached the extension, could this thing continue? Sure. But at some point, we are going to get a retracement back down. And I'd love to see a 618 retracement off of that move. From that low to that high, when it reverses, love to see a 618 retracement off of that to then buy and look for the next move. I'm extremely bullish SLV, which obviously is silver, for many reasons. And that is, we have this all-time high over here, way over here. I got to actually go to a weekly chart to bring it into focus. But the chart has spoken. We have a 75% chance we go into $60, 70 plus we go into $70. Why? From that high to this low, we're already closed above that 618. Amen? So with that in mind, we have a 75% chance we go into 60. 70 plus percent chance we go into 70. And that spells keep buying the dips. I'd love to see one little pullback. I was hoping we got a bigger pullback just for personal reasons so I could load the boat. But I'm not going to short silver here. I do expect some sort of pullback coming now that we reach those smaller extensions. Typically, you get a pullback, but this is your long-term target. Could be years out, but it's definitely, in my humble opinion, will come to pass. Silver will reach 60 and likely even $70 range. Amen? And last but not least, I didn't realize as late as it is, but we're continuing. Bitcoin still struggling. The whole markets are still struggling. So is this last dip over? We're ready to go ripping. We got to break the downtrending highs. Is on a weekly chart. We need to start breaking those downtrending highs to set the tone to go higher. Is this low in place? Maybe, or maybe we need one more flush. But be careful that I still think Bitcoin's going to go up higher to our target zone, 150 to 175. Why do we believe that? Because every other halving, Bitcoin reached the 1618 retracement levels, right? Previous one, we got the high to the low. Post halving in April 20th, it went where? To the 1618 level. The time before that, we got the high to the low. We got the halving in 16. We ripped past the 1618 and did a 1272 up, a 2.272, which was far extreme. But every halving, we at least do a 618 retracement or higher. So for the current score, that puts us at the recent high to low. And boy, did we peg that. Remember when we were talking down here? Bitcoin at 20,000 or lower is a crime. It is so cheap and so underpriced that this would be a time to buy. Even when it got to 25 to 30,000, you heard me preaching for weeks and months that this is a buying opportunity where we're going to go much higher. And it went from 15 to 108, 109. Do I think it's over? Not yet. We're not 12 to 18 months post halving. We're still not even a year past our halving, which occurred in April. So as we get into April, which is another month away, that'll be 12 months. And then we still got midsummer-ish, September, October, to get to that 18-month period. And I do think we're going to go ripping. And I do think it's going to follow this little parameter. And you go, what? Nikkei. I look at the Nikkei as global liquidity. So if we can get global liquidity to start ripping higher, Nikkei starts ripping higher, the Dow, ES, NASDAQ, right? The ones we're talking about going higher. When our stock markets and all go higher, liquidity continues, risk on, risk off. That's when Bitcoin is going to go ripping as well. They're kind of going hand in hand these days. Our markets are pulling back a little bit, Bitcoin's pulling back. Markets go ripping, Bitcoin tries to bounce. Last couple of days, we tried to bounce a little bit. Bitcoin bounced, and not a whole lot. So when that happens, I think we're going to see this baby go ripping. But what's the key? We got to break the downtrending line first. Then we start breaking what? Breaking out. And let me go to the daily chart. And we're expecting this to go what? 150 to 175 is the zone I gave you years ago. And if you'd have bought at 15, 20, or even 30,000, you're thrilled. Well, this is danger zone. If we start closing below this 60, this bottom support zone, where I think Bitcoin is definitely going to reverse from, which may have already reversed. But if we start closing below that prior all-time high, I don't want to see us go below this 73 area. Was our FOMO, fear of missing out trade? Remember that, Harold? How we talked about this baby going ripping when those ETFs came out, and that this thing was going to go ripping higher before even the halving. And then I said the big summer pullback, we got all that. Then we went ripping again. Now we're into the same little pullback zone. I don't want to see us break below this level. But I can accept it going back to the original all-time high from the previous move over here at that 68, 69 would be the absolute lowest. So what is this level? That's the all-time high previously on record of the prior halving versus the FOMO high before the halving. So this was something new. We had ETFs approved, and we got a new high, all-time high before a halving. That's never happened before. So, yes, we got a nice pullback, but as long as this zone holds, I still have our target way up here at that 150, 175. Amen? Any question? So be careful. We might get one more flush. Maybe it's FOMC. Could be. But I would not be, just like I said with the ES and the others, would I be shocked if we make a new swing point low? No. Would I be surprised that this holds? No, right? I wouldn't be shocked it makes a new low, and I wouldn't be surprised at all that the low is already in place. Amen? So when do we get bullish? We start closing back above the magic Fibbo on a daily, and we break this downtrending lower high line. So put us back around that 92 to 94 range. We start closing above that. Then I think we're going to go popping toward 120, 130. And then once we get to 120, 130, that's when the miners like Mara and some of those plays we've been talking about should go ripping higher again. Amen? So is this the low? Maybe, maybe not. But when Bitcoin goes ripping into the 115 to 125, 130,000 range, 130,000, 120 to 130,000 range, this baby should really start ripping because miner profit margins go through the roof. And we're still looking for a big upside should Bitcoin make its run like we're expecting. I expect MAR to make a big run as well. And I'm watching BTBT as well, that we get below $2 or lower. I got some junk bids down here to add to it. I still think we're going to go to some extensions before we're done when Bitcoin finally rips. But pay attention when Bitcoin hits that 115 to 130,000 range. Man, this thing should go ballistic to the upside. So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor instructor. And the one I'm disappointed in is Ethereum, but it's still within its potential reversal zone. I still think there's a very good chance should Bitcoin go ripping to our target, 150, 175, it will pull at least Ethereum back toward 4,000 is what I'm thinking. And if it can finally break that, sky's the limit for this thing to go way higher. And one of the plays we talked about was ETHU. It is way down here in the basement. And the first time we bought it was around $4. We sold it around 12. So that was a huge move. Took the market's money to reinvest in some more down at these lows for looking for the bounce. So what happens if this goes to zero? Then I lose the money. Market's money I've already made off of the prior move. But I still think there's a very good chance at these lows, we're going to go back near these $12 prices. If Ethereum can rip back to 4,000, this should get us back somewhere near that 12 range. And if we can break 4,000, this opens the door for this thing to go into 20s and 30s. Wow. So no buy, sell to hold, but it still has the potential should Bitcoin rip to that 150, 175 as we expect it to, then it should pull Ethereum as Bitcoin made the original run. It did get Ethereum back toward 4,000, and this pushed this baby up to $12, the ETHU 2 times ETF. So risk cuts both ways. If we're wrong, it's going to be ugly. But if we're right, we should get some massive upside. And so far we got profit. Now we're using that profit to buy into it again. And I do have junk bids down here, and I'm looking for more upside. Amen? All righty. So take care. God bless you. We love and appreciate you. And as we like to close, that's it. That's all. We'll see you tomorrow.